what is going on with interest rates and what do we think is going to happen with them as we go through the spring and summer buying season. So I am going to share my screen with you and I'm going to show you guys a chart. So this chart is interest rate movement every single day. So this is what we spend a lot of time reviewing. So the higher we are on the chart, the better the interest rate is. So you can see today, February 22nd, interest rates are here. Prior to that, up here, this is February 9th. This is January 28th. This is January 11th, and all the way up here, January 5th, and then we're back into December and November. So what this means is interest rates have really moved, really from this date, January 5th, all the way to here, and then all the way down here. That is about a point to a point and a quarter in interest rate movement. That is a lot of movement in a short amount of time. Nobody expected that kind of movement. But the reason that it's happening is because inflation is higher than anyone expected. And so unfortunately, when you have high inflation, interest rates will increase and follow inflation right up. So this day here, that was an inflation day. That's when inflation numbers came out, and they were the highest numbers that we have seen. And I believe it was 42 years. So that's a big deal. So what does this mean going forward? Well, as you can see, we've been kind of sitting on this line, and hopefully this is kind of where rates will be. Now, the Federal Reserve is going to be increasing interest rates here come March 16th. Those interest rates are not what our mortgage rates are based on. Those interest rates that they're going to be increasing are the federal funds rate. So where the banks receive money from the government. It also will affect car loans, credit cards, second mortgages, things like that. However, but what you do see happening here is we are guessing how much our interest rates are going to have to go up in order to compensate for what the Federal Reserve is going to do in March. If history repeats itself, which I hope that it does, in general, once the Federal Reserve actually starts raising those interest rates, we might see a little reprieve and maybe see interest rates get a little bit better because they're estimating all this movement. And maybe once they actually start raising the rates, we may not need all of that movement. It's really hard to say. But it does not mean interest rates are going to go back to 3%. Definitely not. But could we be an eighth or a quarter better once they start moving those rates? Yes, we could. So I want you guys to be aware interest rates are higher. They are still very low. But for anyone that saw interest rates or numbers in November or December or even early January, interest rates now are going to be a little bit of a shock. So if you've got additional questions, please call us. That's what we're here for. We want you to stay updated on everything as it's happening. Talk to you soon.